overall, when I look at all the macro numbers that came out over the past few days, the picture is quite mixed, right? On one hand, we've got upside surprises coming from exports as well as service PMIs, but obviously retail sales, infrastructure investment, they all came in below expectation. So I think the way we think about this is that the recovery pace remains quite uncertain, but it hasn't really changed our more forward-looking expectation that the sequential growth momentum for the Chinese economy will start to improve over the next few months, especially in the lead up to the Party Congress, given the political significance of that event.
The catalyst for that, Kinjal, because the numbers so far do not add up to suggest that recovery story is pretty much in the works.
Yeah, we simply need more policy easing, right? And I would argue that based on our framework to think about policies, we can break it down into the 5 key major cohorts: monetary, fiscal, property, COVID-related, as well as industry regulations. And I think simply we need more policy easings to take place over the next few months to really show up the growth momentum going into the year end.
Kinjal, we've seen that cut to the 1-year medium-term lending facility rate this morning by 10 basis points. Is that going to be enough to solve the problem?
I think marginally it's helpful, but as we all observed in the latest monetary data, right, seems like the underlying demand remains quite soft, and based on the total financing number that just came out overnight. So I think reducing financing costs is definitely one of the major ways to improve credit demand, but at the same time, I think we need to really divert all this liquidity into the real economy. I think that has been the challenge for China over the past few months.